This conference will now be recorded.
Fine. So yesterday we have learned about FIFO calculation, and weighted average also we understood how it is calculating. So by default, system is calculating FIFO. Sorry, by default it is calculating weighted average. But if you run this closing, inventory closing or recalculation, then automatically the exact closing value will be updated. Now, I'm sorry. Yesterday, whatever I have created, that one I'm just opening this file. We'll continue by creating a new item for LIFO, and we'll try to map it, and then we'll verify. Okay. Let me map now. Let me create a new item with LIFO calculation. With the LIFO calculation, I will do it. Okay, fine. Let me create a new item. Sorry. I'm creating new item LIFO. For understanding purpose, I'm writing the name of the product. It is LIFO, but in real-time scenario, we'll enter the normal item name and we'll map item model group LIFO. Last in, first out. Item group, any group is fine. Storage dimension group and tracking dimension group. Fine. I have created one item. So for this item, because it is a new item, we don't have any details or any on-hand inventory. There is no transactions. Everything is blank. Okay. Then we'll create one purchase order. So like this same, we'll create purchase order, another purchase order, another sales order. Any vendor is fine. There is no dependency on the vendor. Any vendor you can select. Select site and warehouse. Click OK. Select item which we have created just now. So 10 quantity at the rate of 100. So I'm doing confirmation. If you verify on hand inventory, it will show ordered quantity 10. Ordered in total will be updated 10. Verify. Sorry, I think I have selected item FIFO by mistakenly. Let me map LIFO item. Now if you verify, it will show ordered in total 10 quantity. Ordered in total, it is showing 10 quantity. I'm doing confirmation on product receipt and invoice. Then product receipt. I'm entering product receipt number, some number. Now if you verify, once it is updated product receipt, if you verify, the physical amount will be updated. So if you verify on hand inventory, it was received, so it was updated 10 quantity. Okay.
Please click allow to play the video.
If you verify the transactions, it is received status, purchase order item, purchase order received status. It is not updated any cost amount, because as I told you, the cost amount will be updated at the time of invoicing. Now if you verify the LIFO inside, if you click on LIFO, if you go inside, so it is physical amount is updated with 1000, but cost price is not updated. If you do invoicing, automatically cost price will be updated. So vendor invoice number, which you have received from the vendor, that invoice number you need to enter. Best practices, it is not mandatory, but as per the best practices, you can do invoice date entered, update match status, it is passed, and let me verify the totals. It is 1000. Okay. Now post. Once if it is invoiced, then you can verify on hand inventory. If you refresh, the physical cost amount will be moved to financial cost amount and cost price will be updated. Okay. Another purchase order I'm doing. So yesterday I have shown you the dates. Today I'm not showing the dates. You know, like the dates also you can change and you can enter the old dates. So any date is fine for me. Now I'm doing for the current date. LIFO. 10 quantity. Today it is at the rate of 120. Next purchase order at the rate of 120. I'm doing confirmation. So it was updated. Next I'm doing product receipt. So if you verify on hand inventory, it will update 20 quantity. Look at this one. So it is total available 20 quantity. Actually this is 10 is added in total. This is not available, it is added in total. For reservation it is 20. Okay, actually in the system, in our warehouse, physically we have 10 quantity and we are going to receive another 10 quantity through purchase order. That is the reason it is showing. So if you want to verify always physical inventory and reserved after reservation, what is the available physical? This is the inventory you need to verify. So we have created a purchase order. Let me proceed with the product receipt. If anyone has any doubts, interrupt me, because in this process you are touching major T&L topics. It is updating, it is showing you the purchase order, inventory status and item status, everything it is updating. So if you are not able to follow at any point of time, interrupt me and ask me, because whatever you have learned till now, it is a kind of refresh. So if you verify on hand inventory, now it is updated physical cost amount, but that will not be included in the cost price. It was not included in the cost price. Now I'm doing invoice. So I'm entering invoice number. This invoice number we have received from the vendor. That number you need to enter. And invoice date is not mandatory, but it is a best practice. And update match status, it is passed. Now totals I'm just verifying. It is 1200. I have not entered any charges, taxes, everything. I have not entered. Now post. If you verify on hand inventory, if you refresh, it will be updated that amount here. It is once again, even though it was mapped LIFO, it is calculating weighted average. Okay, it is calculating weighted average only. So now let me do, because as of now there is no sales, so FIFO or LIFO or weighted average, both all are same. It is weighted average only. If it is sales is happened, then what is the calculation? Let us understand. Okay, sorry, this customer is not exist. It is vendor number. Customer number is US001, I think, something. US001. Warehouse 11. Click OK. Fine. LIFO item. Suppose 8 quantity we are selling. At the rate of 200 something. Now if we verify on hand inventory, it will show on order. It will show on order in total it is 8. So the same thing in the here, whatever it is showing, the same thing we are able to see from here also. Downside on order, still it is 2200 total amount and cost price is 110. I'm doing packing slip, post packing slip. Click OK. Click OK. Now if you verify on hand inventory, refresh, it is 880 is calculating. 880 deducted 8 and it is showing 12, because if you do packing slip means we have dispatched the material to the customer. We have dispatched the material to the customer, so it was happened like this. Okay, so it is calculating minus 880. Let me do invoice. Click OK. Click OK. So if you verify on hand inventory, refresh, it was updated like 1320. The cost price is 110. The amount is 1320. It is weighted average calculation. We have mapped LIFO. We have mapped LIFO, but it is calculating. Now, if you verify invoice, the voucher, invoice, and if you verify vouchers, customer account data to sales revenue account credit, customer account data to sales revenue account credit, and cost of goods invoiced account, and then cost of units invoiced. 1 and 3 is at the time of invoice, and second and fourth is at the time of packing slip. Whatever it was posted, it was reversed. Okay, it is considered 880. Now duplicate. I'm running this recalculation for this item LIFO. Let me go to inventory management. Inventory management, periodics, closing and adjustment. As I told you, this closing inventory and recalculation, it is almost same with a little difference. So in the close inventory, it will include all the items, whereas recalculation, you can have a filter to select item to do the recalculation. That is one difference. And another difference is it will be locked. Once it is inventory closing is executed, you cannot post any further more transactions on that period. Okay, I'm changing this filter to item LIFO. Click OK. So I'm executing for this LIFO. No problem. So it is in queue. Let me verify whether the voucher is posted or not. So it is taking some like less than 1 minute or something for refreshing. It was not completed. The badge up is not completed, it is in progress. Sorry. Okay, it was processed now with -80. If you verify now, if you refresh, now as per the LIFO, it is 1240, it was updated. It is cost price is updated to 103.33. If you verify this invoice voucher, refresh. So I don't think so it will change. Vouchers will not change. This is 880. But if you verify on hand inventory, it was became this 103.33. If you verify the transactions, in this transaction, it will show the cost amount will be updated. Earlier it will be 880, now it is 960. In this amount it will be changed, the cost amount, because earlier it is 880, now it was 960 after this voucher adjustment. After this voucher adjustment, it will be updated. Understood or any doubt here? I know a little bit complex, but it's not too complex or something. Little bit complex, but being a logistics consultant, you should know little bit about this one, how it is working. Of course, for junior people, it may not impact, it may not be questioned like, are it, you are not going to work with this functionality immediately, but at least if you have 4 or 5 years of experience, definitely you have to have this knowledge. For junior people, it may or may not face this kind of challenges, but if you are in a support, definitely irrespective of experience, you will get tickets. So you need to understand the basic functionality of FIFO, LIFO, weighted average. Then you can work with the system.
So
Okay.
Satya, except purchase, every other kind of like transactions like sales, transfers, counting, adjustments, the cost price can be adjusted, right?
Yes, exactly. Whatever issue it is there. Yes. Whatever issue is happening, it may be a sales order, it may be a transfer order, it will be adjusted, the cost price. Okay. So even weighted average also, the calculations goes wrong if you have not updated. Suppose I did product receipt and I have not invoiced, because invoice I have not received. After some time, after 1 month, I have received. Up to that date, the cost price will be updated differently, and then later you are going to update this one. So it is must and should, you need to run this inventory closing or recalculation, any one you need to run at least minimum every week or every day also, depending upon the transactions data. If it is a huge data, it is better to run this foreign currency, sorry, inventory closing every day also. Now I have introduced only 4, like 3. One is FIFO, another one is LIFO, another one is weighted average. So in the weighted average calculation, there is a one minus point. What is that minus point means? Weighted average calculation will run for starting of the application to till date. Weighted average will be calculated from the starting of the application to till date. What it means? Suppose I have started this application from 2017. From 2017, I am running this product. Then it will update the weighted average calculation from 2017 to till date. It will calculate weighted average calculations. There are huge transactions in the back end, so weighted average will be calculated like that, which is a little bit complex and performance issues may occur. That is the reason moving average is newly introduced. Instead of weighted average, earlier weighted average was only available, but in 2012, I mean to say before AX 2009, in AX 2009 and before, this moving average is not exist. In 2012, in AX 2012, this moving average was introduced. To be frankly, this moving average is for retail. For retail industry, there will be a huge transactions. So moving average is introduced in AX 2012 for retail, and it was used in normal distribution companies also. So if you go to let me take this setups, item model groups. If you click new, we have FIFO, LIFO. LIFO date means within the LIFO calculation, date wise it will calculate. Weighted average and weighted average date, that is within the date. So earlier it is available. So these are available. And standard cost I will discuss. Give me some time. I'm parking this point later. I will discuss this one later. Moving average. This was not available in AX 2009. The oldest version in AX 2009 it is not available. In 2012 it was introduced. Actually it was introduced for retail, but nowadays there are many companies or many clients, they are using moving average than weighted average. What is the reason moving average is? So in this moving average, whatever it was happened. For remaining it will be considered. What it means? Suppose I have executed on 31st October. Then it was arrived, suppose the remaining quantity is 18, suppose 18 quantity, the cost price is suppose 105. Then I have created one more purchase order invoice, so 20 quantity at the rate of 150, suppose 125. Then it will do weighted average for these items only. Earlier what happened, I have purchased 20, I have purchased 10, 30 and 12 I have sold. Those things will not be considered. Already it was arrived, weighted average. So it will continue this one. If it is a normal weighted average, what happens? For 18, how it was arrived? One is purchase order 20, I have purchased 20 at the rate of some price, and another purchase order invoice 10 quantity, and sales order it is 12. Then we have arrived 18 quantity. Okay, in the weighted average it will consider all this. it will exclude this one, and it will consider this. So means the weighted average will be considered all the transactions in the system, whereas weighted average, whatever it was calculated weighted moving average already, it is fine, and then remaining average will be 18 plus 20, 18 multiplied with 105 plus 20 multiplied with 125 divided by 38, it will calculate. Whereas weighted average, it will consider this one with the price whatever it is there, and this price and this price, and it will come to weighted average and it will calculate. So moving average is same weighted average, but it will not take the historical data. That is the major difference. So because of that, it is very slight difference is there, very slight difference. If it is not considering the historical data, it will consider, but performance wise excellent when compared with weighted average. Okay, so that is the reason moving average was introduced. Moving average. Okay, understood? Any doubt in this? LIFO date means within the LIFO calculation day wise. Weighted average within the like weighted average date. Within one day you are calculating weighted average. So openly if I speak, I have not used much about this weighted average date and LIFO date, but I have used FIFO, LIFO and weighted average and moving average a lot. These are the 4 transactions. Now standard cost I'm going to discuss now. I'm going to discuss. Apart from this one, is this clear or any doubts? Before going to start with standard cost. Okay, standard cost, what is this? Standard cost is majorly will be used in production companies, manufacturing industries. Manufacturing industries, standard cost. Okay, what is this means? Actually, for manufacturing industries, we have a function called costing sheet. Cost management. Give me 1 second. It is a part of production, but production people are there here. That is the reason I'm just touching this one. Give me 1 second. I will search this one. Costing sheet. Cost management, indirect cost accounting policies. So costing sheets. So this is costing sheet. In this, there will be direct cost and indirect cost. Direct cost and indirect cost. You need to map this costing sheet. So see, look at this one, electronic components. Okay, labor charges. So overhead charges. There are so many calculations. Overhead charges, how it will be. And then internal logistics cost amounts. There are so many methods here. So one is the material cost, another one is like overhead charges. because if it is a production is required, I need people, I need electricity, I need machinery, I need tools. I'm sorry. So there will be so many resources required, then only I can finish the material. So one is place I need, very, very big place. Missionaries I need. Tools I required tools. Resources required. If it is anything is not exist, I cannot produce these new items. So skilled labor it is required. So for all those things, you are going to define costing sheet in this costing sheet you are defining. Once you defined costing sheets, and you need to map costing versions. Costing versions you need to define here. How it will be calculations. Costing versions. The check boxes you need to define how you want. Then whenever you are creating an item, this is actually production process. In the production process, automatically system will do calculations and you will arrive the cost price of the item. So let me take one item. Let me show you. I hope some C002 is having standard cost. Let me verify. It is expense item. I think D002 something. D001 and D002 will have this kind of standard cost. So in this, it is standard cost model. Standard. If it is a standard, you need to enter. If you are purchasing, if you are through production process, usually if it is a standard cost model, item model group is standard cost. Usually you will not purchase this material. You are going to produce this item. So through production process, cost price will be updated automatically. Through production process, cost price will be updated automatically. In case this item, if you are producing and if you are purchasing, and you are producing both, sometimes I am producing, sometimes I am purchasing. If I am purchasing, then manage cost, item price. This price should be exist in the system. This price should be exist in the system. Otherwise, you cannot purchase the material. What it means, let me show you. New costing sheet, costing version. I'm taking site 2. Okay, I'm entering some price. Okay, here actually in the roll-up cost by cost group. One second. Calculate item costs. If you look at this one, this is the costing calculation. It will take BOM items and everything, it will be calculated. So here cost price model group and item price, purchase price or something. So there will be so many methods inside. Costing version you need to select. Okay, the production order or something, whatever it is there, you need to update this one and click OK. it will arrive the cost price, some price. Okay, it is arriving some price. So in this, suppose I am selecting site 2. Okay, costing version. Here it will show all the calculations. So why I'm telling this one, in case you are not a production consultant, you are simply a logistics consultant, then at any point of time, if you are purchasing the material which is item model group as standard cost, then it will validate active prices exist or not. So you are through purchase, whatever the price is there, that price you are calculating from here, and the purchase price, it may be different. And the purchase price, suppose it is 185. So the difference between purchase price and the through purchases, the cost price will be arrived. That price and this price, the variance will be in the system. So in the production process, you are arriving the cost price using standard cost method. This cost price may be around 165 something, and through purchases you are entering some price. It is suppose 182 or something. Then the difference will be posted to variance. I'm talking about production process, I'm talking about logistics, I'm talking about finance. There will be one ledger account, variance account will be posted if you are using this like and this one. Suppose, let me show you item model group. Of course, I'm making you complex now to everyone, but it is important. If you are able to follow, that will be good. If you are not able to follow, leave it, because it is too complex to understand. Here, look at this one. Whenever you are posting a purchase like item in this, here there will be variance in the purchase order. Variance account will be there. I'm showing you from here postings in the standard cost variance. Stock variation, this account. Give me 1 minute. Purchase price variance, not that one, this one. Purchase price variance will be posted, this account. What is this means? The purchase price is 182 and the cost price from the production process 165. If you are producing or if you are manufacturing, you are going to get extra benefit, like it is 15 plus 2, 17 rupees or dollars, whatever it is there, it is a profit if you are producing. Because you are not producing, you are losing this much amount. That amount will be posted as a purchase price variance. If you are purchasing this item instead of production. And so simplest way, if you are unable to follow whatever I have explained everything, remember small technique for practicing purpose. If you are doing purchase of this item, if it is item model group is standard cost, it will throw error message cost price is not exist. Then you need to come here and you need to enter the cost price. Simple. Here. So otherwise, let me show you the error first. Let me make you some error message and I will show you that error message solution. Okay. So for this item, item D003, what I'm doing now, I will create a purchase order. Okay. And then I will show you the variance will be posted. Of course, this is mix of all modules. One is logistics, because usually I will not touch this kind of explanation usually in the trainings based on the participants, because so many people are experienced people in this session. That is the reason I am explaining. For junior people, don't make confusion. Simply you need to enter the cost price. That's it. Okay, I'm clicking OK. So D003, I hope this item. Yes. So I'm doing D003. Suppose 10 quantity I'm purchasing. Price is 185. Purchase price is 185. I'm doing confirmation. I'm doing product receipt. So I'm entering product receipt number. Click OK. So it is, I got error message. No cost roll up is found for this item. Activate the item cost price. I'm getting error message because for this item, just give me one. Okay, for this item, if you go here in the item price, it is available only for site 1. If it is for site 2, we are creating purchase order site 2. So cost price is not capturing. So you need to enter the cost price for site 2. To arrive that cost price, I need to go to pending. I need to click here and I need to select the costing version. This is a production process, to be frankly. In the production, it will be updated. So the price you can enter directly here, or so suppose if you enter directly 185 something, and you can activate. Otherwise, calculate item. There are two options. Suppose I have entered directly cost price and I'm activating this one. So now if you verify the activate price, it will show 185. Now I'm doing purchase order. Now once again product receipt. So if I'm doing product receipt, then it will not throw any error message because the cost price is already entered here. Now I can do product receipt. So this is only for standard cost. For standard cost method, it will react for these items. So for junior people, whoever is learning freshly, those people they leave it or they can enter this cost price simply. Now, if you verify the vouchers, it will post. Okay, because it is 185, there is no issue. Let me create one more purchase order with 190 because I have entered cost price here as 185 and in the purchase order also have entered 185. There is no difference, so it will not create any problems. If I do a new purchase order with 190, the 5 difference will be posted as a variance. Let me show you.
Satya, one quick question.
Yes, please.
Hello.
Yeah.
So this active cost price error, whatever you have shown, right? So that is coming while I'm doing a purchase order creation.
Purchase order, product receipt, not purchase order creation.
Correct. Product receipt.
Yeah.
So suppose I have some item and that cost price is not active and my sales order is downloaded with that particular item. The error message will not come up, right? At that particular time.
Sorry. Sales order.
Sales order. Suppose sales
Whenever
order I am creating.
Yes.
And in my sales order, that particular item is there in one of my BOM item. So at the time of that, the error message will not come.
No, because cost price will be updated at the 2 times, 2 processes. One is purchase order process, otherwise production process, not at the time of sales.
Okay.
So before sales, you need to have the stock. So the stock will be available with the 2 options. One is production, one is purchase order. Am I right?
Okay.
Yeah, exactly. So look at this one now. Price variance is updated. Here I have entered 185 and during purchase order process I did 190. So there is a difference. That 25 is posted as a price variance, purchase price variance. Okay, actually, to be frankly, if you go inside about production process, there is a lot of costing methods you need to understand. As I told you, one module, it was actually in 2012 also it is available. The same, it is not a separate module, but it was separated as a module now. But this is cost management is part of same in 2012 also available. But the menus are collected and properly pasted here by differently in this one. One is for production consultants. You need to understand about costing sheets in depth and costing versions. And there is some more, it is cost calculations also, it will be there. Cost groups, yes. Cost groups also, it is one of the important topic. So you need to understand costing sheets, costing versions, cost groups to arrive the calculations. Okay, so for production, this is a part of production. This is a part of production, but you should learn this one. Of course, 2 major topics always, finance and production. One person cannot be expertise completely 100% from finance or production. So I know some extent about the production process. So whatever the area it is required, I'm just giving you a alert here. You can understand about these versions like costing versions, costing sheets, and cost groups. Okay, in these cost groups, you will find some calculations, how to arrive. Profit with percentage. Okay, fine. So simply for T&L consultants, whenever if you are getting the cost price, that a cost roll up price error message during purchase, like product receipt, during product receipt, you need to come here and you need to enter the cost price. That's it. Simple for logistics consultants. Okay, if you are working in a company, you need to check with your production consultant to get the cost price of the item. For practicing purpose, if you are doing in USMF or DMF company, if you are facing challenges, item model group is standard, then you can come here, item price, you can enter, or you can calculate the cost price. Then it will clear the issue. Understood, everyone?
Yeah, the flow we got it high level, Satya, but why do we need like a standard group? We have so many other groups, right? FIFO, LIFO, weighted average, moving average. Why do we need a different one, specially called like a standard group? How it is different from other groups?
Yeah, because as I told you, in the cost management, I have shown you like costing sheet. Am I right? The first one is costing sheet. In this costing sheet, it is you are including the resource price, electricity bill, machinery cost you need to include. Whereas for LIFO, FIFO, weighted average, it is not required because you are not producing. Whereas to arrive the cost price of the item, it is not only the material cost, I need to include this also, because I need to invest some hundreds of crores of rupees for machinery. That price, if I'm not including, if I'm arriving this cost price simply, then the margin is completely different. Suppose for cost of the material is maybe a 10 rupees. To produce that item, I need electricity, I need machinery and all those things. That also I need to include in the cost price calculation. Then I can get exact profit. Simple example, I will give you an example. Suppose I'm staying in Hyderabad, Kukatpalli. Now, like I want to purchase 10 pens. I want to purchase. Here it is 5 rupees. Near to my shop, like near to my home, it is 10 rupees. Now, if I like in Amirpet, they are giving at the rate of 4 rupees only. They are giving at the rate of 4 rupees. For 10 pens, I need to move from here to Amirpet. The charges are suppose 20 rupees, and coming back 20 rupees, 40 rupees, and only he is giving at the rate of 40 rupees, like 4 rupees only. So 10 multiplied with 40 rupees, 4 rupees, it is 40 rupees. But here for transportation, suppose 30 rupees is the expenditure. Then it will be cost to me is 70 rupees. Agree with me? Even though purchase price is less, there is a overhead charges. So it is a meaningless for 10 quantity if I am going to far away, 20 kilometers far away, to purchase this 4 rupees instead of 5 rupees. Agree with me? Suppose I want 1000 pieces. I want to distribute my child birthday and she want to distribute pens. Then I need 1000 pieces. In that case, definitely I will go to Amirpet and I will purchase at the rate of 4 rupees. Agree with me?
Yeah.
So here overhead charges should be calculated to arrive actual profit. If you want to get a profit of the company, then cost price minus sales price minus cost price. So this cost price, unless if I am not updating the overhead charges like electricity, machinery charges, skilled employees expenses, all those things I need to include this cost price, then only I will arrive profit. Otherwise, unnecessarily it will show profit a lot. Agree with me?
Yes.
So for that, I need, for manufacturing industry, definitely standard cost method should be required. They need to verify all these things, like it will be included this costing versions, costing sheets, and costing groups. In the costing groups, you are updating some profit here itself, profit percentage, it will be updated. So as I told you, costing sheet is the most important. From that only we are arriving the cost price of the item, perfect cost price. So this is here, as I told you, in this item price, this suppose I'm doing for site 3, calculate items. If you are doing, it will show the all the prices. If you click here, cost calculations, calculate cost item. So let me map, suppose the same one. I don't know B1 is available or not. So let me do it. So it will calculate everything. Click OK. And if you look at the view calculations for this, if you look at the view calculations, based on the costing sheet, it will update all the details. The material cost, prices, and everything. Detailed explanation will be there. So material cost, labor cost, packing cost, assembly cost, quality test, total labor, and overhead charges. All these things will be calculated and it was arrived the cost price. So this is not possible in FIFO LIFO weighted average. Clear, Varma? So this is a huge task inside. It is calculating. There is a lot of roads operations, assembly, testing, test operations, packing, all these operations. Everything will be pinpoint, like small pieces will be calculated, and we are arriving the actual cost.
Okay.
So it is must.
So if they already know the beforehand the price, either we can directly enter from item or we can configure it as a different item and record it. If on the fly they are going to calculate it means, then we have to maintain the costing versions and all sheets and all that stuff, right?
Yeah. So actually 99% in general, if it is a standard cost method is mapped means, for any client, standard cost method means usually they want to produce this item. That is the reason they have mapped. So it will be processed automatically. You need not to worry. It will be, we are not going to purchase this item. So through production process will be updated cost price, and it's simply you are selling that item. It is not required. But because in demo system we are practicing a lot, for purchasing we are purchasing this standard cost material, standard model, item model group, standard we are purchasing by mistakenly. It is, we cannot restrict them, right? So while doing at that time, if you are facing, then you need to add this item price, cost price in this system. Otherwise, in real time scenario, if you are doing production, definitely you will do the production process
Hello? Can you hear me?
Am I audible now?
Yeah, just now.
Fine. So clear now? Concept?
Yeah.
Okay, fine. So now we'll try to understand a little bit more about item model group, inventory management.
So, okay, one question. Okay.
Yeah, yeah.
So standard cost, there is a costing versions activation date, right? I'm assuming like whenever there is a change in components, we'll activate the price. Okay. Say January 1st it is $100 and January 16th it is $120 of the item. Okay. So if you like recalculate the sales price, the adjustment will happen even for like a standard group, or it won't happen for like a standard model group.
Standard model group, it will be like, as I told you, like it is the standard cost price only, standard cost price only. So it will update the cost price, it will update the cost price for each and every batch separately. So actually it is not required if you are not doing any purchase process. For this item, if you are not doing any purchase process, it is not required at all, this one, because cost price will be updated through production process. And if you, whenever you are clicking on end, at the time cost price will be, sometimes cost price may be increased, sometimes cost price may be decreased based on the wastage. There will be wastage inside, am I right? There will be, sometimes it will be increased, so it will be decreased. This is required only if you are for production item. If you are purchasing, then only you need to provide this information, otherwise it is not required. Otherwise it is not required. Clear? So it will be keep on changing the cost price of the standard cost. It will not be fixed, because suppose for I have planned for 100 items, sometimes I may produce only 90, sometimes I may produce 80, wastage of 15 or 20 it may be, sometimes it will be wastage. So based on that calculation, the cost price will be updated. Okay, fine. Now let me go to item model group, inventory management, item model groups. So in this FIFO or LIFO or weighted average, remember post physical value, post physical inventory. This checkbox is at the time of packing slip, the ledger accounts will be posted. That is, this ledger account should be there. So we have, for particularly for account finance team, I think finance team is available. Okay, fine. So if you want, at the time of product receipt, if you want ledger accounts to be posted, then in accounts payable parameters, checkbox should be exist, am I right? Ledger in post in ledger accounts. Let me show you. Accounts payable, setup, accounts payable parameters. So here post product receipt in ledger. Along with this checkbox should be enabled always. Post physical inventory. post physical inventory. If these two checkboxes exist, then it will post at the time of product receipt. Ledger accounts will be posted at the time of product receipt. These two checkboxes should be enabled. Earlier, I have explained only this checkbox. Now I am showing you this also. These two checkboxes combination, it will allow you to the product ledger accounts at the time of product receipt. In the same manner, packing slip, sales order process. Then in AR parameters, the same thing. Post packing slip and ledger. And this post financial inventory. Sorry, physical inventory only. I'm sorry. These two checkboxes should be enabled. Then packing slip ledger accounts will be posted. For invoice posting, whether it is a customer invoice or vendor invoice. If it is inventory required, then item model group financial inventory. Based on so once again in between network issue, just 1 minute. Okay, so I hope you are able to hear me now. Are you able to hear me now?
Yes, we are.
Okay, fine. Of this checkbox, because of this checkbox, financial postings are happening. This is because of this checkbox, product receipt or packing slip ledger accounts is posting. For finance people, this is important. Okay, so these 4 ledger accounts is related to postings. One is this is at the time of packing slip or product receipt, and this is at the time of invoicing. The financial postings happening. This is ledger integration. Okay, accrued liable on product receipt means this is it will be posted as if it is service items. Suppose take the example service items, it will be enabled only one. It will not impact inventory. It will impact directly ledger account. Only this ledger account. Only this ledger account is apart from inventory, it is posting to ledger accounts. Okay, for standard cost, it will be enabled for all. This is deferred revenue. Just now I have shown. Deferred revenue accounts will be posted at the time of purchase order, like purchase process or sales process. It will be deferred. The deferred amount will be posted. So for standard cost, you need to enable these 4 check boxes. If it is LIFO, FIFO or weighted average, it will be like this 4 accounts. Suppose see here, I'm clicking new. It is by default, it will be 4 accounts. Apart from this one, it will be selected automatically. This is inbuilt. If you are selecting this one, it will be posted to this one, because purchase expenditure for product, purchase expenditure uninvoiced, those things are posting automatically. That is this account. So if you click new, it will propose you 1, 2, 3, 4, and this will be hidden. It will be by default because you are using this. If it is expenditure items, I will remove all these things. Then it will be only one. This is expense items. So if you look at this, if it is expense items, we are enabling only one. We are disabling this one. If it is normal item, 1, 2, 3, 4, and it will be automatically enabled. You cannot disable this one. If it is a standard cost, it will be all. It will be enabled. This also it will be updated. Deferred revenue also it will be posted. Okay. Regarding this one in detail, we are going to learn most probably next Monday. I'm going to explain about this one in detail. Monday I will discuss on Monday or Tuesday. So tomorrow most probably I will start. I will explain one more topic. There are 2 topics I need to explain. One is 3-way matching functionality. Another one is item model group, which I need to discuss in detail. Item model group, then company creation process. After that, once again, batches will be split, P&L separately, finance separate. So these are the topics. For this, it will take 3 days. It will take 3 days, company creation process. And this is 1 day, extra 1 day, and this is 1 day. So please bear with me another 5 days, most probably. After that, it will be separated batches. Okay, once again, it will be 6 to 7 is finance and 7 to 8 is logistics. So I need to explain a little bit more insights about these check boxes. I have briefed about these check boxes. Of course, this check boxes is related to finance. Remaining all are T&L topics, T&L topics, but no issues. I will encourage finance team also should learn this one. Of course, it is a T&L topic. Only these 4 check boxes is related to finance. Remaining all are T&L, but this is heart of the application. If you are comparing with a human being, this is a heart of the application. If you are selecting this one, it will behave differently. If you are selecting this one, it will behave differently. I need to explain each and every checkbox in detail, particularly for T&L consultants. Of course, finance consultant also be participant, participate in this also, no issues. Okay, fine. Any more questions or any more doubts? Any more clarifications required? So if nothing, then in 5 minutes, I don't want to start once again the topic. I will start most probably tomorrow the new topic. We'll connect once again tomorrow morning, 6:30 a.m. IST. So please bear with another 5 days, these 3 days and another 2 days on Monday, Tuesday, and from next Wednesday onwards, it will be separated. Okay, fine. See you all. Bye.
Thank you.